All right, welcome to The Explainer. We've got a special Talk Tickers briefing for you today, and it's a real head-scratcher. We're diving into Opera's Q2 2025 earnings. Now, on the surface, everything looked great. Fantastic, even. But Wall Street? Well, Wall Street saw something different. So let's get right into it and figure out what's going on.
So, here's the big question, right? Opera comes out, they beat on revenue, and they raise their guidance for the whole year. I mean, that's textbook stuff. That should send the stock flying, but it didn't. Instead, it fell over 4%, and on some pretty heavy volume too. So what on earth did investors see that the rest of us missed in the headlines?
Okay, so let's break down the numbers because this is where the plot thickens. You've got revenue coming in at $143 million. That's a solid beat. And that full-year guidance, they didn't just raise it, they blew past what the analysts were predicting. But, and there's always a but, isn't there? Look closer. That little adjusted EPS line, a 1-cent miss. Just a penny. But when you pair that with the stock dropping, well, that's where our investigation begins.
All right, so let's unpack this earnings paradox.
First up, let's talk about what's powering the business right now. This is the good stuff. The core business is absolutely roaring. Check this out. 30%. That's a 30% jump in revenue year over year. And listen, this wasn't just a beat. They absolutely shattered their own guidance. They were guiding for what, 22 to 26%? Yeah, 30% is a whole other level. That's some serious momentum.
So, where's all this growth coming from? Well, when you dig in, it gets even more impressive. Their advertising revenue just exploded, up a massive 44%. That's huge, and it's being driven by e-commerce. And here's the other key thing. Search revenue is back in the double digits, up 11%. So it's not just one thing. The whole engine is firing on all cylinders.
And what this really shows you is a big shift in what Opera is. You know, we think of it as a browser company, but advertising now makes up almost 2/3 of their entire revenue. They're turning into a real advertising powerhouse, and they're building it on this massive foundation of nearly 300 million users. That's a big deal.
Okay, so the core business is strong, but what about the future? Well, Opera is making a couple of really big bets here, specifically in AI and fintech.
So on the one hand, you've got Opera Neon. This is their big play in AI, their vision for a browser built from the ground up for artificial intelligence. And on the other hand, you have MiniPay. This is their fintech angle, a stablecoin wallet designed to make global payments super simple. And just to be clear, these aren't little experiments. Management is telling us these are absolutely core to where the company is headed.
And management has this really interesting vision for Neon. They keep using this term agentic browser. So what does that even mean? The idea is that instead of AI being something you go to on a website, it's baked right into the browser itself. It understands what you're doing, it can automate tasks for you. They think it could become like a new operating system, but for AI services. Pretty ambitious stuff.
Then you've got MiniPay, and wow, the growth here is just off the charts. It has absolutely rocketed past 9 million activated wallets. We're talking over 250 million transactions processed. That easily makes it one of the fastest growing wallets of its kind in the entire world. This gives Opera a legitimate, serious foothold in the future of finance.
Okay, let's pause. Incredible growth, exciting future bets. So, I'll ask it again. Why did the stock drop? It's time to flip the coin and look at the bear case. Let's solve this thing.
And the whole thing really starts with this one number, 354%. I mean, what in the world could be up 354%?
Well, that's the year-over-year increase in share-based compensation, or SBC. Now, this is a non-cash expense, right? But for investors, a number like that is a massive red flag. Why? Because it can dilute the value of existing shares, and it makes you ask some really tough questions about what it truly costs to run this company and, how profitable it really is.
And that's not all. The CFO himself, Frodo Jacobson, pointed to another problem. The US dollar has been weak, and that's actually making their costs in other countries go up, so it's hitting their profit margins. You see the picture now? Revenue is soaring, which is great, but costs are also rising from a couple of different directions. And that starts to explain that little earnings miss we saw earlier.
So there you have it. A powerful growth story running headfirst into some very real worries about costs. So which side wins out? Let's bring it all together for our final rating, the next call.
So let's lay it all out. The bull case? It's pretty compelling. You've got that incredible 30% revenue growth, they raised their guidance, and you have these huge future opportunities with Neon and MiniPay. But the bear case is just as strong, isn't it? That insane jump in SBC, the small but significant EPS miss, and the pressure on their margins. You just can't ignore that stuff.
So what's our call moving forward? Well, for next quarter, we think they'll probably hit the high end of their revenue guidance. Seasonality should help the ad business, but all eyes are going to be on those costs. You've got this tug of war between growth and costs, and because of that, we think the stock is probably going to be stuck in a range for a while. The market's going to wait and see which of these two stories, the growth story or the cost story, wins out.
And for that exact reason, our final rating is market perform. The growth is fantastic and the new projects are super exciting, no doubt about it. But those factors are perfectly balanced or maybe canceled out by the huge concerns around their cost structure. Look, OPRA has a ton of potential, but they absolutely have to prove that they can turn all that amazing revenue growth into actual profit for shareholders without watering down the stock.
So, at the end of the day, here's the question for any investor. Can OPRA's big bets on AI and fintech start making real money before the rising costs and that shareholder dilution drag the whole story down? That's the billion-dollar question. And as always, remember, this is for informational purposes only. It is not financial advice.